I don't think the perpetual money machine overcomes cyclicality. Liquidity in, liquidity out. I don't think you can avoid it. So it's such a dominant force that if the Fed have to, and the other central banks have to reduce liquidity at the end of the cycle, which they almost always do, it will hit the assets. But the point being is, I don't believe they're going to gift us the chance yet again to buy an asset down 90% and give us a 30 or 40x return every time we go back to the casino. I mean, it's hilarious, the opportunity they've given us. And if you've taken it, it's made enormous life-changing profit. That's my biggest fear, is the damn thing goes down 40% and we're all caught offside waiting for the last leg and we don't get it. That's a bigger fear. It's not, and this is why I don't want to be trapped out of the market either. A lot of people fear getting trapped in the market. My fear is being trapped out of the market. This is the largest wealth-generating machine humanity's ever been given.
Wait a minute, everyone. We all agree that the crypto market never sleeps, but with countless newsletters out there, how do you choose the best one for you? BitcoinZella stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now guess who keeps his eye on us? The author of best-selling book Rich Dad Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to BitcoinZella today and enjoy the new edge. In today's video, Raoul Pal explains why crypto is the largest wealth-generating machine humanity's ever been given and how we can get the best benefits from it. Raoul gives us his strategy to survive the next market cycle. So without wasting any time, let's dive into the video.
Everybody has PTSD because the last cycle was stunted. For whatever reason. It started earlier, more aggressive because of what happened with the 2020 shenanigans and then the FTX. It was more stunted. That's what my view is, and it caught many of us by surprise. Would I have done anything different? No, I wouldn't have sold a penny anyway. So it was not in my thesis. I have a long-term thesis. Jeff Bezos is the richest man in the world, not because he fucking traded his stock. It's because he didn't trade his stock, right? I know it's antithetical for most people, but it is really the way to get rich, is just do nothing. But we all live in the real world and we want to cash in some lifestyle chips and we want to, make sure that we feel like we've achieved something out of all of the hard work that we put in. So my view is I'm just going to use time. Somewhere towards the end of this year, I'll take a third off. Then I don't give a shit. And then if we have a super cycle, I'll take another chunk off. But I don't know what to do with that money. I don't really need to do anything else. So let's just sit in cash and wait for a bear market and hope it happens. God forbid if it doesn't happen, but at least I'll get some exposure. This is why, if you can avoid trying to do too much, in 7 years' time, you will thank yourself for not having done it. I've done both. I've sold out in 2017. The other thing is, let's say your $1,000 is now worth $1 million and you sell out and you nail the high, you're within 20% of the high, brilliant. Market collapses down 90%. You will not put your $1 million back in. You can't do it. Even though it's de-risked, nobody can do that. And so which case you will under-allocate compared to what you would have had. It's weird. The psychology of investing, particularly when this is a high-stakes game, we've all got lots of our net worth tied up in these bets. The psychology of investing is really hard. So I don't know. We also build out models in the macro investing tool, GMI, everything else around the timing, because we need to do it for the asset management firm to a certain extent. But me personally, I'm trying not to fret that noise.
The approval of United States spot Ethereum exchange-traded funds will depend on how quickly issuers can respond to comments from the Securities and Exchange Commission, says Chairman Gary Gensler. Gensler's comments appear to put the onus for approvals on issuers and indicate the SEC will not drag the process out as some feared. On May 23, the SEC approved 819 Bits4 filings to list spot Ethereum ETF on various U.S. exchanges, though they can't start trading until they have the required S1 registration statement approvals. These registrants are self-motivated to be responsive to the comments they get, but it's really up to them how responsive they are, said Gensler in a June 6 report from Reuters. The comments shed new light on Gensler's comments only a date earlier on CNBC, where he said the next steps would take some time. Some believe this to mean the commission would take their time signing off on the S-1 forms. Bloomberg ETF analyst Raoul Pal Explains has said previously the process could take weeks or months, though he's tipped the first week of July as his base case. The SEC is yet to explain why it appeared to change its tone on spot Ethereum ETF just days before the first decision deadline. However, Gensler hinted to Reuters that the move was influenced by Grayscale's Bitcoin ETF legal challenge last year. Grayscale successfully argued in court that because the SEC had approved Bitcoin futures ETF, there should be no reason to deny spot Bitcoin ETF, which became instrumental in their approval. Speaking to Reuters, Gensler said that Ethereum's case was similar, and that the SEC staff looked at these Ethereum filings, looked at the various correlations. The correlations are relatively similar to the correlations in the Bitcoin space.
How are you thinking about the end of the cycle? Because this is the one thing, I had to put a whole piece out on this to help people think it through. You know, I went through the last cycle and didn't sell anything because I didn't want to. I just wanted to buy, to add, to compound. I've done that twice, and I've sold out one cycle in the middle. So, I've traded different ways. How are you thinking about it for the end of the cycle for you? You know, are you taking lifestyle chips off? Are you staying in? You're stepping by the sidelines? Give me your rough thesis.
So this is probably the most important question today. First of all, to be a successful investor, you never want to make the same mistake twice. I was caught out last time around. My target for Bitcoin was 89K. I had actually exited out of things like Matic and stuff. Kind of got a lot of the exits right, but not Bitcoin, not Solana. I was not aware of the shenanigans that were happening behind the scenes until it was too late. And that was the problem. However, I was in a position to, have cash to deploy at the bottom. So waited, nibbled. And then when things really bottomed hard, went in hard with a lot. That's where I could use my, like when you got a big mattress of leverage, you can do things much more creatively with that on a proxy like MicroStrategy than you can by buying spot Bitcoin. That was my decision, which I published as well. The interesting thing about this cycle, which has me confused, first of all, I didn't want to make the same mistake twice, so I made a conscious decision to invest more than 7 digits in a team of developers to build tools that will help us identify the tops. First of all, I do not want to miss this top. Second, we're building right now a set of profit-taking rotation optimization models, which are going to be critical to scale out. And the very interesting thing, when you do the math of this, imagine you sell 20% of your bag, layers going up to what is your top price target. Even if you take 20% of your bag off, or 20% of the dollar value off, at the end of the day, you only leave between 11 and 13% on the table if you assume we reach all-time highs. Like the math behind profit taking is fascinating. People want to try time the exact top. Okay, Bitcoin's going to 150. I'm going to sell it at 149. That is a losing strategy. And now there is a wild card here, which also has my little brain perplexed. What happens if you get the perpetual bid and Bitcoin ETF does what gold GLD did, up for 8 years, even through a financial crisis?
Despite a record 19-day streak of inflows in United States-based spot Bitcoin exchange-traded funds, many are wondering why the price of Bitcoin has failed to surpass its all-time high of $73,679 set in March. Analysts say they have the answer. As of June 6, spot Bitcoin ETF around the world held around 1.3 million Bitcoin, or 5.2% of BTC circulating supply, with a big chunk of that held by the US-listed ETF, according to AHO-BL15 Capital. However, analysts say many other factors impact the price and that the ETF don't have enough clout. ETF flows are fantastic, but they are not strong enough to exceed the entire ecosystem selling yet, Kipriol Investments founder Charles Edwards. You do realize the market is made up of spot, futures, ETF, and options, right? Price at any point in time is a product of all of these, not just one of them, crypto trader Christopher Inks wrote in a June 7X post. ETF are important, but the price of BTC is more heavily influenced by macroeconomic factors and geopolitical events. However, in the nearly 3 months since then, it has failed to rally further, trading mainly within the range of its high in the $60,000 support level. Edwards indicated that for another significant price surge to happen, confirmation of one of the 3 major factors will be required: higher average ETF buying, less in long-term holder selling, growth in U.S. or global liquidity, he explained. Edwards emphasized that the selling by long-term holders is a significant factor, noting that those who have held Bitcoin for more than 2 years have been selling more frequently in 2024. This group's share of the total Bitcoin supply has dropped slightly to 54% over the past 6 months, according to Edwards, which has a much bigger impact on Bitcoin than it sounds. While 3% doesn't sound like much, that is equivalent to about 630,000 Bitcoin, or about 3x the total amount purchased by all of the Bitcoin ETF in the United States, he explained. He further noted that the Bitcoin halving effects haven't kicked in yet. We likely haven't seen the impacts of the halving, with the daily Bitcoin issuance dropping by 50% in March. We will likely see the delta between ETF consumption and Bitcoin mined widen substantially over the next 12 months. And do not forget to subscribe to Bitcoin Seller. The most important news will reach your inbox on a daily basis and for free. I do not know why you have not subscribed yet. If you like the video, give it a thumbs up and subscribe for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.